Okay, welcome back to the channel. So this is just going to be about graphite stocks, because the lithium-ion battery is basically called a graphite battery. You could just call it the graphite battery. Half graphite in the anode. The anode. Not very expensive compared to the cathode, but a very important part. Your vehicle doesn't go without the graphite in the anode. And yes, they have other batteries that don't use graphite in the anode, but they're not very good. For electric vehicles, the LFP battery is the battery of the next decade, which uses natural and synthetic graphite in the anode. So we've got heaps of graphite now for the electric vehicles, but fast forward 2025, 2026 and beyond, we're probably going to be running short of natural graphite, synthetic graphite to go on the batteries, unless there's investment made. So what will probably happen, the price goes up like this, then people redo the numbers on the project and they say, well, we'll give you that money. So they get the money, they build the project, and then sometimes they catch up on demand and the price goes down. But a professional is saying the super cycle of lithium, it's just a higher average, so it goes up and down, but the average price is higher. But anyway, if you bought a company at a low price for $30 million, they only have to spend $100 million to build the mine, then you make a lot of money. So best company, I always go to the example. Reason the lithium price went up, they were near a capital city, only had to spend less than $100 million to make 200,000 tons of hard rock lithium per year, meaning like $400 million in EBITDA. So other companies have to spend $400 million to make the same amount. These guys only had to spend $100 million. They basically got the money, not much dilution, and that's why they did a 20x, where other companies who had to raise $400 million maybe only did a 5x or less. So dilution is your enemy. So you want to buy a company with a low capex, meaning they don't have to spend much money, means they don't have to borrow money off someone who then wants a share of the business. So you want to find a low capex thing. Why it's a low capex? Because it's near a capital city. Don't have to build massive roads. Everything's in place. If everything's already built, then you don't have anything left to spend. You only spend a little bit of money, and you don't want to spend. You want to spend less and make lots. That's the company you want to go for. And remember, you don't have to. There's going to be a lot of companies that don't have that, and you don't invest in them. You invest in the good ones. So carrying on, prime example, core lithium went up with the price. Continuing on, so back to graphite. So Novonix, 500 million. I think when I bought them here at $1, they're actually like 250 million. They say, always just do the rough figures, they're going to get to 150,000 tons per annum of natural graphite. At $5,000 a profit a ton, it's like $750 million in EBITDA. The thing they don't tell you is how much you have to raise to get there. They're obviously going to go to 30,000 tons, do that well, get that money, then go up to 50,000 tons, and then as the graphite demand goes up, 150,000 tons. That's the anode with graphite. They also have a cathode pilot plan or something happening. $500 million volume, and it doesn't actually tell you how much it costs to build this 150,000. So that's the thing you have to look into. I'm not going to invest in Novonix right now, so I don't care. Other thing with Novonix, they actually test their own batteries and stuff, so they know what's good and what's not. Because they actually have really good testing equipment, so they test to really small voltage differences, so they know what battery works and what doesn't. Here we are, new greenfield facility, initial 30,000 per annum, so 30,000 times $5,000 profit. What's that? 150 million per year. And guess what they can do with that money? Build the next stage with little dilution. So it's not like you race out and buy this company for 500 million. Doesn't seem like incredibly good. Could be wrong, and this price goes to $2. Like, damn, I should have bought it at $1. So everyone also write down your thoughts. Like, sometimes companies go down, and you say, "Oh, I knew this company was bad." And you're right, just write down that day when the company drops 10%, say, "Oh, yep, they're not going to do anything good." Write down how you felt, and then also write down how you felt when they went up 10%. You're like, "Oh, damn, I should have bought in." Because you got to remember, it goes down 10%. The company hasn't changed, just your feelings have changed on the company. So write those feelings down and do the rough numbers, because that's what matters. I'm actually down quite a few stocks. Like this stock was, I think 28 cents from average price. It went up to like 35 cents. So I was up like so much, and then now I'm down. But guess what? The company hasn't changed. It's actually drilled more, and what they thought they were going to do, they have done. just haven't got there. So these guys, I think about 30 million to buy, probably got 5 million in cash. Huge resource that will last them 50 to 100 years. No shortage of resource. Near existing infrastructure, South Australia, existing renewables, etc. So they should have good low capex, meaning they spend 100 million, make that 100 million per year, and they got downstream as well. That's ITM. Quickly, just go WKT, IG6, also just even on this stock, or a bit down. They did go up like 40%, because only 4 cents, like 40%. But didn't care, I wasn't going to sell them. And guess what? They could be making $25 million after cost and tax end this year. And for a company that's about 60 to 80 million, always go to ASX for the actual market cap. That's going to, if they're making $25 million after costs, it's probably going to triple or something like that. But guess what? They're not probably going to make 25 million. They might make half that and still going to be pretty good. Because maybe that's a streamline, iron out the kinks in making graphite, etc. So moving on, not going into too much detail. IG6 company I'm also down on, because back when I bought these company first, I bought them stupidly. You buy these things up here. They came down, I bought even more, and it went down even further. Not too worried because it wasn't a huge thing. Lucky I waited till the market was down a bit to go on bigger in some of these stocks. So anyway, they bring out a thing on the thing, so they got the mine, get out of the ground, and then they're going to take it to this collie place where they're going to make it into spear balls and coat it, and they have a thing on that, which the numbers aren't as good as just getting out of the ground and selling it to China. But guess what? Those numbers change. If you look at CXO's numbers, they didn't look that good. Then lithium price went up, and the numbers were like ridiculous. They spend 100 million and make $500 million per year. So this could happen to graphite, maybe not to the same extent, but I think they're going to 300 million and then make $100 million per year. But guess what? The price triples as electric vehicles come down in price, meaning there's more demand for them, meaning more demand for graphite, and people are willing to pay triple the price because it's still pretty cheap. If you look at the overall cost, I'm not knowing how exactly it will go, but anyway, you get the point. That's IG6. So they're going to get out of the ground and take it this place and coat it. So yes, that's it for this thing. Just remember, if you invest in anything, do the rough numbers for yourself. You can ring up the company, ask them things. Remember, interest rates, when they drop, probably won't see dropping interest rates for forever now, for 20 years. Interest rates go down, free money everywhere, price go up. This stock got majorly hyped beyond, it was just ridiculously priced. It was like $10 billion for a company that hadn't even done 3,000 tons of graphite yet, and weren't going to do, I think they're going to make $500 million when they eventually get to 150,000 tons, which means they're already priced as if they're making that much money, but they weren't only making 3,000. So it's ridiculously priced here, and then it's came back down as they haven't even delivered very well on what they said they're going to do anyway. Well, they're chipping away at it, but it's come back down. Goes down, people sell out. Still $500 million isn't like, if this was half the price, definitely would be buying it, but it's good, but is it great? I don't know. Don't have to buy it. I'd rather buy something like ITM, who, yeah, it's going down now, but guess what? If you do the rough sums, it looks pretty good. 22 million. Let's just do the rough sums of this because it's quite easy. And you know the rough sums because RNU, their close neighbor, has a financial study which is pretty similar. So you buy them at 28 million, 5 million cash. They probably have to do about $10 million worth of drilling more. Then what happens? They can do that. They do the study. Study says $100 million. Then you make $100 million in EBITDA per year. Graphite demand comes in. Government comes along, as they did with RNU, said, I'll give you a free loan. If not, then someone else comes along, says, and the person who comes along can't be greedy and say, oh, you need to borrow a lot of money. The person coming along says, oh, take our money. We went in on this deal, and just gives a little bit. Is what happens when the capex is in your favor. So they do that, price goes up, and boom. Anyway, I'm just talking a lot of crap on this, so that is it for this video. Always do the rough numbers, like and subscribe, tell me your companies, and I'll tell you what I think.